Hello and welcome back. In this video, we're continuing our journey through the Procure-to-Pay P2P cycle by walking you through Stage 3, receiving the vendor bill for goods that have already been received. If you've been following along, you'll remember that we've already covered the purchase order PO and receiving the materials. Now it's time to record the vendor bill, a crucial step before initiating payment. Let's dive into the process. To begin, we navigate to the Receive Bills application. We click Add to create a new bill. The bill date appears automatically, and the accounting period is auto-selected by the system. Next, we select the vendor from the list. For this demo, we'll choose Caterpillar Thailand. We then choose the bill type as Against Receipt, since this bill corresponds to received materials. After selecting the receipt number, in our case 75, the bill amount is automatically fetched based on that receipt. However, this amount is editable in case the vendor includes additional charges such as insurance, port handling fees, or any other service costs. The operating unit, warehouse or store where the goods were received, and the cost center, for example maintenance department, are selected. We also fill in party reference, vendor bill number, vendor bill date, optional narration, reference type, for example purchase order, which can be customized. Now we'll save the bill, and you'll see that both items are automatically displayed as received earlier during the goods receipt. The bill amount is $235,800 in foreign currency, and based on the exchange rate, it is converted to $884,250 in local currency. Next, we move to process the bill, which will automatically generate the required accounting entries. Simply click the Process button. As soon as we complete this step, the system generates the accounting entries. In this case, accounts payable is credited with the bill amount, and the inventory account is debited with the same amount. These accounts, what gets debited or credited, are all configurable through the auto accounting setup. So depending on your organization's requirements, the accounting logic can be modified, but here it's generated automatically based on predefined rules. Now let's say the vendor's bill includes an additional $1,000 for insurance charges related to the shipment. To account for this, we'll add $1,000 to the bill amount in foreign currency, and at the same time, we'll need to add the equivalent value in the local currency to maintain proper accounting. We'll need to convert this to local currency using the exchange rate 3.75, which is already defined in the purchase order. At an exchange rate of 3.75, the equivalent local amount would be $1,000 times 3.75 equals $3,750. We'll now add this amount to the existing bill total of $884,250, which brings the new total to $888,000. You can edit the bill amount accordingly, and optionally add a narration to indicate that this adjustment is for insurance. However, narration is already in place, so this is optional. Since we've increased the total amount, the debit and credit values are no longer matching. To fix this, we'll add a new accounting line item for insurance expense of $3,750 in local currency. You can add a reference number, if available, and update the narration to reflect that this charge is linked to the shipment. Now the total debit and credit sides both match at $888,000, and our bill booking process is complete. Once everything is verified, click the Post button. This action posts the bill into the ledger, and the bill is now officially ready for payment. In the next video, we'll take you through the final stage of the P2P cycle, making the payment against this bill. Thanks for watching.